and it got people out of the house, which was great. And so she ended up winning 2 tickets for next year, a $75 Eel River Brewing gift certificate, a bunch of old hop swag, and 2 6-packs of Mad River beer. So she was super excited, and I checked her ID, so we're all good on that front. And just a reminder, if anybody did win a basket, I don't think there's anybody on here that won a basket. No, but I'll just put it out there into the universe. Just remember to come by and pick up your winning door prize. Oh, and we actually had the 50-50. We had $233 split 2 ways. So Crystal Lewis ended up getting $116.75. So that was pretty great. That was
great. Yeah.
Some of the biggest raffle tickets that we've had in a long time. I'm like, shoot, we should do this virtual all the time.
Yeah, I like this.
It worked out pretty good. So let's see. Yeah, as you guys were talking before we started recording, the Humboldt County Fair Junior Livestock Auction was this past weekend. So that was great. I can't remember if I updated everybody on the citywide yard sale, but that has been canceled, unfortunately, because festivals are still not allowed. We did, well, I say we, the Downtown Merchants Association, mainly Chris Broadstock, he spearheaded the writing of the plan, him and Diana, and unfortunately, even with 2 attempts, it was declined. So, but you're welcome to have your own yard sale, just can't have a big, giant yard sale in downtown. Also, my last announcement is our next quarterly newsletter featuring the very handsome Bob Judavine on the cover. We'll be hitting mailboxes this week. He is joined by local artist Penny Fougeot, who painted the Strongs Creek art pole. So I'm really excited about this edition. There's some surprises. There's a big centerfold, fold out. So yeah, watch your mailbox this week. So that's it for me.
Will you have any extra copies in the office?
I hope so. The printer did not do an overrun last time because we had to make a very slim margins because of everything being closed and sure. Advertising. But I have been promised twice that I will be getting an overrun. So yes, I will save copies. I have a list of people that I know I need to send who don't have offices in Fortuna or mailboxes in Fortuna.
Okay, great.
Yes.
Can I ask anything on apple harvest or no apple harvest or a mini apple harvest? Or...
So I don't have anything firm yet, but what you'll see an announcement in the newsletter, but I'll give you guys a sneak peek. The chamber is putting on a virtual scavenger hunt and it'll last a week. The details will be forthcoming. I've also created an Apple Harvest 2020 page on our website where I'll be posting updates as I know what's happening. The committee, and Bob can back me up on this, the committee as a whole didn't decide on one specific thing. There's a bunch of us kind of doing little things where there's going to be some possibly a decorating contest in downtown with the merchants. They'll have some fall decorations put up. We may do a restaurant bake-off with apples donated from Clendenin's as kind of a contest. The scavenger hunt will be through an app called Goose Chase, and it'll be free to participants, and it'll involve finding things around town, taking selfies, answering trivia questions, and checking in at places, and possibly purchasing items to support our local businesses. So we'll have more information on that. Let's see, Monica at Fresh on Main is looking to do apple pie sales to help benefit the high school, since they won't be able to do that this year. And then Drew and Cliff are trying to get something going at Clendenin's, but they'll have to talk to public health to see if they can get that done or not. Okay. So there's a lot of little things, but not like one, because we can't have a festival. There isn't one central thing that's happening, but nothing at the fire hall because of COVID. They won't have their disaster fair, and nothing at the parks or the shopping centers.
Got it. Got it. Okay.
Is that right, Bob? Did I encapsulate that okay?
You were glorious, Renee. I'm not going to lie. Not again, anyway. Maybe the only thing I'd add is I talked to Drew just a day or two ago, and he said they are just slamming busy. They're busy
Yeah.
as the dickens. So all good.
Good, good, good. Yeah, that's awesome.
Yeah,
Awesome.
I think they were thinking about doing a to-go barbecue or something to that effect. I don't know if they're still planning that, but that's what would be happening at Clendenin's.
Okay.
And then the Parks Department was going to donate some of their picnic tables so they could be spaced out for social distancing.
Oh, great, great. Do you have any updates with the city buildings, River Lodge or Monday Club from the county perspective? I thought I read something that they're maybe going into another phase, or am I dreaming of that?
You're not dreaming about it. We don't have specifics yet. The governor did change the tier structure or the phase structure into tiers, and then within the tiers, there's different parameters. The public health is reviewing that, and they will give us more guidance either later today or tomorrow about what that means for certain businesses. So one thing I did see was that indoor dining at 50% capacity may be back on the table. So that is great news. I'm hoping that applies to us. We're at a moderate level, but I haven't gone through the specifics either to really see what that means. And so I'm just kind of waiting on public health for that guidance.
Okay, great. And that's it for you? Any more wonderful
Oh, one other thing that I just thought of. Well, two things really. Cal Savers, for employers that have 100 or more employees, their deadline to sign up for that program is September 30th. If you have less than 100 employees, you don't have to worry about it, but just keep that in mind. It will be phased in over the next 2 years, so 2021 and 2022 will affect employers with less than 100 employees. And that is the state-sponsored retirement plan. There's a link to more information in today's newsletter. And then the other thing that I will be sending out some more information on is President Trump's executive order regarding deferral of Social Security tax. I had a phone call with Greg, our financial advisor at Wyatt Whitchurch and Anderson, about it. He's going to send me some guidance that they received. Basically, his opinion is it's a bad idea. So, like, don't, because you're going to end up paying later, and it's not. It's just a deferral. It's, you know, it's not don't pay it. You never have to pay it. And then there's other things for business owners to think about. What happens if an employee terminates during the deferral period and not the repayment period? Who's responsible for ultimately paying that portion? The employers still have to pay the employee portion, and so there's some things to think about. So we'll send out some more information on that as soon as I get that from Greg. But as always, check with your own tax accountant for specific information on how it might affect your business. And now that's it for me.
Oh, okay. All right. Any other announcements from anybody else that's tuned in? Nothing going on. Boy, it's, you know, must be slowly getting into September. So, okay, well,
I see we have our big 50-50 winner, Crystal Lewis, on the line.
There
I don't know.
Crystal.
Yay.
She wants hi.
Way to go, Crystal. That's awesome. Very good. All right. Well, let's turn it over to Fred Robinson with Edward Jones. So you're on, Fred.
Let me figure out if I can remember how to do this.
Yeah, I know. It's very technical. Oh, I see something.
All right. Everyone see that?
Yes.
Let me. Okay. I want to make sure I can see my own face so that if I start doing something silly, I'm still seeing myself. So anyways, I am obviously Fred Robinson with Edward Jones. I am a member of the Chamber Board, which apparently Renee has decided to start tabbing all of us to present to fill some space on these things. So what I wanted to share with you individually all is really just an update on what the stock market did last week. I give this presentation every Tuesday afternoon via Zoom right now. So you are all more than welcome if you would like to join in the future. Right now it's Tuesday at 4 o'clock. If you're like, hey, I want to know what went on last week, feel free to call me, text, email, call my office, and we will get you the Zoom link. And you're more than welcome to join in if you want or if you don't want. But Edward Jones creates this guidance and this update every week for us to share with our communities. We really try to make it simple and not too technical so that everyone can understand. With that, I have to honor a commitment to confidentiality. And I don't want to waste your time, so please, if you have any questions, write them down. I'm happy to answer them at the end. However, if those questions are specific related to any individual investment or something that you particularly own, I cannot share that or answer those questions in the group setting. That would be a violation of your privacy. So, but I'm happy to answer any of those questions offline or over the phone later on. So with that, let me get started. Last week, the markets finished higher. They're on track for their best August in 34 years and continuing the rally after the third bear market in 2 decades, according to Bloomberg. The S&P 500, which is an index of 500 companies, is up nearly 52% since the bear market bottom on March 23rd, and up nearly 8% for the year, posting a new record high of $34.99. Federal Reserve Board Chairman Jerome Powell stated last week that the Fed will let inflation run slightly higher than the traditional 2%, meaning interest rates will stay lower for longer, which is a tailwind for stocks. Personal spending rose 1.9% in July, the 3rd month in a row showing growth, indicating the economic recovery is underway. Taking a look at some of the recent economic data, this chart shows that the coronavirus prompted a sharp decline in business investments in the first quarter of 2020, which we can all probably imagine. Industrial production has improved over the last 3 months, with forward-looking surveys pointing to a solid pace of recovery ahead. The last 3 months provided additional evidence that the economy is gradually exiting the deep recession, with data hinting to a sizable bounce in the 3rd quarter. A real-time forecast from the Federal Reserve Bank of Atlanta estimates that 3rd quarter GDP will grow 26%, following the 32% decline in the 2nd quarter. If this proves to be the case by the end of September, the economy will have recovered half of its pandemic-induced losses, leaving real GDP about 5% below pre-crisis levels. The housing market has been a notable area of strength. New and existing home purchases are exceeding their pre-pandemic levels at the best level since 2006 and are rising from a year ago. Consumers redirected their spending from travel, leisure, and other services to durables and other hard goods, driving July retail sales about 1% higher from their January high. And this resilience ties back to the unprecedented support with record low interest rates and direct government aid, which so far seems to have worked as intended. However, the news is on some economic fronts, it's important to note that almost 6 months after a record 6.9 million Americans filed for unemployment, initial jobless claims continue to run about 1 million a week, which is higher than at any point during the Great Recession in 2008-2009. Initially, we saw a rapid improvement in unemployment rates as the economy reopened and temporary furloughed workers returned to their jobs. More recently, though, as activity in large segments of the services economy remains constrained, some of those temporary layoffs are becoming permanent. The number of permanently unemployed doubled from February to July. So this really poses the new threat to consumer confidence and the trajectory of our recovery. As I mentioned before, the recovery's progress hinges on the coronavirus and medical advancements advancements to combat it. To that end, news on testing, treatment, and vaccine discovery for COVID-19 has been encouraging. Last week, the government granted emergency use authorization for a new low-cost coronavirus test that delivers results in minutes. This could play an important role in detecting the virus early, and a handful of biotech companies around the world have reported progress in clinical trials of their vaccine candidates. This graph illustrates the battle the U.S. has waged against the coronavirus in the first half of the year. After peaking around 70,000 in July, the number of new daily coronavirus cases has started to trend lower to about 43,000 a day, according to Johns Hopkins University. While this is by no means a major victory, given the elevated levels of infection, the decline demonstrates that adjusting restrictions at the local level can be effective in containing the spread of the virus and potentially reducing the need of additional lockdown measures. Despite these recent positive developments, however, questions about the effectiveness of potential vaccines remain, along with logistical challenges of production and distribution. So we're still facing plenty of unknowns, and the risks of more activity and more moving indoors once summer ends and students return to school is a big concern. With 98% of the S&P 500 companies having reported second quarter results, the earnings delivery has been much stronger than expected. Improving economic data and an extremely low hurdle rate have led to earnings revisions improving in all regions, with the second quarter most likely marking an inflection point in all of the profit cycles. When we look at the relationship between earnings and gross domestic product, profits held up much better than was the worst case in past downturns, which is displayed in this graph. The likely reasons are: one, it was a very condensed time frame for this recession. We went down and came back up very quickly. Second one is the sector compositions of the major indexes have been skewed toward different sectors that benefited from the pandemic, such as tech and healthcare. So the stock market really was able to take advantage of Apple and technology stocks and healthcare stocks that thrived during this pandemic as they've been able to continue to go forward. Manufacturing that was less cyclical than normal, given the nature of the recession and more immediate hits on services, was difficult. However, a lot of the manufacturing still had to happen. So that was good. Improved credit conditions because of the lower interest rates, I think, helped everybody. And then aggressive cost control measures being taken by corporations. So a lot of them, they slashed their personnel, they slashed their costs, and it really helped a lot of the big corporations hold on during the initial downturn. However, in contrast to the seemingly good news on profits, valuations are elevated compared to long-term historical averages. This is the reflection of record low interest rates and the influence this has on much investors and what are they willing to pay for the future earnings of those businesses. Nevertheless, forward equity returns will have to get back to relying heavily on earnings growth rather than furthering valuation expansion. One other thing that is of note right now is that the biggest adjustment to the Dow Jones Industrial Index since 2003 is underway. It announced last week that Salesforce, Amgen, and Honeywell will replace ExxonMobil, Pfizer, and Raytheon effective September 1st. The addition of Salesforce and removal of Exxon, which was the most valuable U.S. publicly traded company as recently as 2014, is the biggest news, as it was triggered by Apple's 4-for-1 stock split. What's important to remember here is that being added or removed from an index does not change a business's fundamental value. While additions and deletions can cause short-term volatility in share prices as mutual funds and ETFs align portfolios to the new index, volatility usually subsides, and the relative importance of the Dow Jones Index does not change. While it's still one of the most commonly followed equity indexes, The S&P 500 is a broader index more representative of the U.S. large cap universe. According to S&P Global, there's approximately $28 billion that uses the Dow Jones Index as a benchmark versus $11 trillion that is benchmarked by the S&P 500. So if you're really trying to get a better look at the big picture of our overall economy, the S&P 500, it just has way more companies to figure out where we're actually at. And then the last thing is that there's a little more about the Fed's inflation target. At their annual policy symposium, Chairman Powell announced a shift in the Fed's approach to achieving its long-term average inflation target. This means the Fed will allow inflation to run moderately above its 2% goal, as shown in this graph, for some time following a period of below average inflation. The Fed is revising its policy stance around changes in employment, suggesting that the central bank will continue to provide accommodation when unemployment is high, but may no longer raise rates to cool off the economy simply because the economy is low, which is what we had started to see. Even though the announcements lacked details around the implementation, both changes imply that monetary policy is likely to stay accommodative for even longer. Because rates are already low across the yield curve and investors have already baked in expectations for a zero policy rate for the next couple of years, we don't believe the Fed's updated approach to its average inflation will have a big impact on any narrative around monetary policy. In considering of all of these week's changes and what I've talked about, what can you do to your portfolio? How does that help you individually, which is what most people care about? We are most likely to enter a volatile period than we've experienced over the summer. The first stage of the recovery delivered a quick snapback in activity, was facilitated by the Fed's extraordinary actions, along with generous federal aid and pent-up demand. We all wanted to go shopping. With the latter two conditions fading, the second leg of the recovery will be more dependent on self-sustaining economic improvement. The path forward could be bumpier and the pace of the recovery slower. As a result, stocks could start to consolidate some of their gains. What can you do? Use what we expect to be a more volatile period to your advantage. While diversification does not guarantee a profit or protect against loss, it can help fill in any portfolio gaps and enhance your diversification across asset classes, sectors, and geographies. U.S. stocks, specifically those large cap tech companies, have shined during the crisis, but the equity rally has started to broaden recently. We recommend maintaining appropriate exposure to other small cap and international stocks, as well as cyclical sectors that have been hit hard by the pandemic and stand to benefit from a potentially faster than expected economic recovery or a larger than expected new round of stimulus. And that is all I have. Anyone have any questions?
I have a question.
Okay, go.
Okay.
Okay, I'll go first.
Okay.
So with the Cal Savers plan that's coming out, what opportunities or options does Edward Jones have for employers if they wanted to institute personal or individual retirement accounts? Is that something Edward Jones could offer versus a traditional 401k?
So that's a great question. So what Cal Savers is it's a state mandated run program where any employer has to offer a retirement plan. Cal Savers is a Roth IRA plan, and it is entirely funded by the employee's contribution. So there's supposed to be no cost to the businesses. You're just literally taking money out of your employees' paychecks and doing withholding just like tax and sending it into the Cal Savers program where they will invest it. And you have to do that for all employees unless they opt out. So if you don't want to do it, they have to come sign a form for you. If a business is not utilizing that, or they don't want to utilize that, they can go and set up their own plan individually for themselves. That's something that Edward Jones or most financial advisors could do Most people are going to tend towards some kind of a simple IRA plan or a SEP if it's an individual, but for most people, it will be a simple plan where you can set up a pre-tax plan so that you'll be withholding money pre-tax from your employers and for yourself. And so there's a little bit added benefit if you're the employer. When you have a simple plan, you can set more money aside and reduce your taxable income. So there's some benefit to the business owners, as well as that meets the mandate so that you do not have to participate in CalSavers. And if you currently have a plan, whether it's a simple plan or a 401k plan, and you do not want to participate in CalSavers, you do need to log in to the CalSavers, and there is a waiver form that essentially you have to go in and fill out and say, yes, I have a plan. This is my business. We have a plan. We are exempt. Otherwise, they will expect you to do it. If you don't sign up for CalSavers or go in and say you're exempt with your own plan, I believe it's $100 a day fine once that hits if you are subject to that. So it definitely will have some impact. Businesses will have to pay attention. Right now, I know it's only for coming up businesses with 100 employees. Next year, that limit drops to 50 employees, and 2 years from now, that limit drops to any business with 5 or more employees.
Oh, wow.
Yeah.
So is that a
yes.
new program?
It is new. So this end of September is the first round of mandatory penalty if you're not signed up.
Wow.
And then thank you for that distinction too, because a pre-tax is very different than post-tax. So if a business did want you to come in, or another, well, let's use you because you're our presenter, to do a presentation to enroll their employees, that's something that Edward Jones could offer, or should they go in and see you individually? How would that work?
So usually how that would work is we would want to meet with the business owner and or HR person, whoever's going to handle those decisions, to make sure we're presenting the right kind of plan. Because that's really, it's more about getting the right kind of plan than just any plan. However, once we got that set up and we set up the initial plan, then myself anyways at Edward Jones, we would then be able to go to your business and present to your business at a staff meeting or something like that. And then we would work with your employees on an individual basis to get their account set up so that you don't have to be making investment decisions, which could potentially create some liability issues later on down the road.
Good point.
Oh, can you give just a little snippet background on Edward Jones Company?
Yes, we have been around for 98 years, I believe now. Edward Jones started with Edward Jones Sr. and back east, and he kind of wanted to be like all the big major companies. And then eventually he started working with his son, and the very abbreviated version, and his son said that's not how we should do it. We should work with individual investors and go shake somebody's hand and meet them. And so essentially started going door to door in the Midwest, meeting with ranchers and farmers and business owners and creating individualized investment strategies. And that really shaped our company. We have changed that. And now we're, as a general rule, one investor or one advisor per office. We work mainly with individual investors, working with long-term, high-quality investments to create a personalized strategy, and we try to partner with all of our clients over the course of their life. So we're not your typical stockbroker that is just, hey, I got a hot tip, let's buy it and try to make a bunch of money. That's not necessarily what we do. We're looking at the big picture, what your goals are, and then let's create a strategy to meet those goals.
Oh, I didn't realize it was that old, but knew it was an older
Yep.
company. That's awesome. That's awesome.
And we're headquarters out of St. Louis. We are the biggest partnership on Wall Street. So we are not a corporation. We are a partnership. So the company is owned by the advisors and the office administrators that work for us.
Oh.
So.
Cool. Thanks. Any other questions for Fred? Nothing. This is interesting times. I'm sure it's been kind of a whirlwind, but That was a great presentation. I even understood most of it, so that's a good thing. Anything else for our presenter? Well, I appreciate you taking the time. And what time is that presentation you do weekly again?
So I do the same presentation. Obviously, the information changes each week, but
Yeah.
I do the same presentation Tuesday at 4 o'clock via Zoom right now. So you're welcome to come or tell friends and family if they have questions. And our analysts really try to do a good job of making it simple and understandable so that we're not talking above things.
Okay, so you don't have to be a client or with Edward Jones to tune in.
You do not have to be. Not have to be a client.
Okay, great. Okay, anything else, Renee, from your office?
Nope, but Fred, if you want to send me that link to your weekly Zoom, assuming is it the same link every week?
It is.
Oh, or next week, I'll include that, and then people can start joining you.
Okay, so
Okay, great.
I assume we don't have a meeting next week because it's Labor Day. Is that correct?
Day, yay! It's a day off.
To check the calendar, it's just, you know, I was pretty sure Labor Day was coming up, so.
Yes, so thank you. Yeah, so September 7th, we will be off. The regular city council meeting will be that Tuesday, the 8th, as far as I know. And then our next meeting will be September 14th, and our guest presenters will be Gary Ogle and Dan Rojo from AFLAC. So we can hear
Okay.
all about supplemental insurance plans and why you may want to investigate getting some of those, but yeah.
Okay, awesome,
Yes.
awesome. Let's see, I just tag in on city council of, I think it's probably on their website, but I'm on the rec district board, and we always meet the first Wednesday of the month. And this is, you know, the pool committee and everything else, recreation. And so anybody's welcome to tune into that one. And you can find the Zoom link on the city's website. So it is this coming Wednesday, which is, I think, the 2nd. So anyway,
Yes.
It's all part of the city. So any other announcements from everyone? Anyone? Anything going on? Okay, it's so quiet. Everyone have a great week and a long weekend, and stay cool and stay home because it's smoky every place else but here. So we're pretty fortunate where we are. It's pretty miserable down the road a little bit. So let's hope good things that the firefighters can get this under control, and let's look for some rain soon. So anyway. All right, thank you all, and we will see you in a couple weeks on the 14th.
Sounds good. Bye. Thanks, everybody.
Bye.
Thank you.
Bye-bye.
Thank you,
Goodbye.
Fred.